more on hedge funds, we bring in a founder and hedge fund manager, Michael Pascutti. He recently launched Eagle River Asset Management this year. Previously, he was at Citadel, PIMCO, and Sandalman Partners, and he is joining us now. Michael, we're very glad to welcome you to Money Moves. Thanks for being with us in our kickoff week. Great to have such solid guests. So you've done this before. You've founded firms before. What do you know now, this time around, that was, let's just say, the benefit of your experience from last time?
So operational due diligence and operational foundation is the key to getting a hedge fund right from the start. Portfolio management is obviously very, very important, delivering returns. However, what oftentimes hurts managers, and particularly startup managers, is if they don't get the operations right, the portfolio managers then get pulled into non-research, non-idea generating meetings and infrastructure. Fortunately for me, I've been in the business a long, long time. I know some very, very good people. We have a very good COO, very good CFO, who allow me to focus on research and ideas.
So speaking of research and speaking of ideas, a lot of what you've done in just one area of your expertise has been in convertible arbitrage. And this is still a big part of your fund's positions right now. What is so special? How do you make this work to get good returns for your investors?
So a lot of the securities we invest in, we do from the eyes of a credit manager. And convertible arb is no different. So convertible arbitrage is a way in which we can set up positions for our fund such that they will do very, very well on the way up and extraordinarily well on the way down. So you take advantage of the tails. Convertible arb, when you invest in a convertible, it has an equity component, an equity option. You can convert that security into equity, so it has an option. As a result, one can hedge out that risk by shorting stock. When you short the stock and it falls dramatically, you still have a claim to the company at par. So if one does their homework correctly and does good fundamental credit research, you can do very, very well by making money on your short and still getting par for your bonds later.
So, Michael, we're going to take just a quick break. Michael, with that in mind, we have to bug you for one pick, right? You know, you want to get away with that, but there's at least one that we can talk about, right? And you were highlighting it earlier. I think we even have some charts made up so people can follow. But Global Industries, why is this proven to be a good position for you?
So this is a name we talked about in our pre-marketing of the fund. It was a security that has a lot of the attributes we look for in the credit world. It had a reasonable cash position. It had a lot of PP&E, a lot of plant, property, and equipment, so it had very high asset coverage. Its cash flow was pretty much break even. Their assets were primarily located in the Gulf of Mexico, and as we know, the fallout from the British Petroleum spill, BP spill, the permits were not being given for new drilling. Global Industry provides services to drill for oil, primarily in the Gulf of Mexico. Once the BP spill hit, their operations turned down dramatically.
Yeah, because, I mean, market sentiment went so against. I mean, there were many people who said, you know what, there's never going to be drilling allowed again in the Gulf of Mexico. Now, obviously, we've seen that rescinded even this week.
That's right. And that's what we anticipated. We thought two things. We thought, one, their operations need to come back because America needs jobs and searching for energy and oil, right? And so searching for oil creates good jobs in America. So we thought their assets would come back. At the same time, they're portable, so they could have been, sent to Africa or whatnot. So this company had debt. The debt that we invested in were the 2 3/4 bonds, and the bonds were trading around 70 cents on the dollar. Even though, from a credit perspective, we thought that these securities could be paid off. The asset coverage was very, very high. In addition, a number of things we look for in the credits we go along are, is it an industry that's consolidated? Are there bids for these assets? And in this particular case, the oil and gas research is a consolidating industry, and even in bankruptcy, there's a strong bid for these assets.
So here's some of the things that we put up, just and our viewers can see on the screen now. Some of the things that you feel like are just part of doing your good homework.
That's right.
And if you can find these things, high cash balance, strong cash flow, consolidating industry, as you just mentioned, and a kind of a change,
that's right,
then those represent opportunities.
So this particular particular bond was trading at a $70 price. So you're claiming bankruptcy as par. It was going to mature at par. And we felt asset coverage was very, very good. So even if it went bankrupt, you were going to get par in bankruptcy. And as I said,
so 30 points is pretty strong.
30 points is pretty strong. And as we've seen, M&A has fallen a bit, but even in the August, September months, there has been a fair bit of M&A.
Where do you see when you just analyze M&A trends? Because as you're mentioning, a lot of your fund decisions are based on events and a lot on convertible on, and this is obviously a nice melting point. So oil, gas, is that pretty high up in the list?
Good.
Where you think?
Pharma is a consolidating sector. We've seen M&A across the board. Corporations have very, very high cash balances. They need to grow. They need to cut costs. They need to increase their margins, and a good way to do that is to try to find synergies by growing. And with high cash balances, the desire and the need to grow is strong.
And also, it's almost impossible for all of these companies and all of these industries to grow every single thing that they want organically.
Exactly.
So with cash on the balance sheet, it becomes a natural play. Michael, thank you for coming.
Pleasure.
Thank you for spending the time with us on Money Moves. Michael Pascutti joining us here of Eagle River Asset Management.